Welcome back to Accounting Made Easy series. This is Waithera Mwangi presenting to you Accounting Made Easy. Today, we would like to look at accounting for intangible assets. So we want to define intangible assets according to International Accounting Standards number 38. So what is the objective of this standard? The objective is to specify the accounting treatment of intangible assets not covered by another standard. So we want to define the term intangible assets. We are saying these are identifiable non-monetary assets without physical form. They must be controlled by a firm as a result of a past event, and future economic benefits are expected to flow to the firm. Conditions for recognition of an intangible assets, there are two. We are saying number one, it is probable that future economic benefits attributable to the asset will flow to the firm. And then number two, the cost of an asset can be reliably measured. So we want to look at internally generated intangible assets. So we are saying a purchased intangible asset standing alone will be easier to attribute cost, as it will consist of the following: the purchase price at which it was bought, and the cost directly attributable to making the asset ready for use. So what are internally generated intangible assets? Number one, we are going to look at what intangible assets that come along as a result of development. And we are saying development is the application of research findings or other knowledge to a plan or a design for the production of a new or substantially improved materials, devices, product systems, processes, or services before the start of commercial production or use. We are saying we need to capitalize the cost of development or the development of prototypes when the following conditions are fulfilled. Number one, probable future economic benefits will flow to the firm. Number two, there is intention to complete and use or sell it. Number three, resources are adequate and available to complete and use or sell it. Then there is ability to use or sell the asset. Then there is some technical feasibility, and then expenditure can be reliably measurable. So we can summarize that by using the term pilot. So there are some other intangible assets, for example, research. And we are saying research is the original and planned investigation undertaken with the purpose of gaining new scientific knowledge or understanding. And we are saying the cost should not be capitalized. The cost should be expensed in the profit and loss account as it is incurred. Other intangible assets include goodwill, and we are saying it should not be recognized as an asset. Others are brands or trademarks, customer lists, publishing titles, mastheads, and we are saying we should not capitalize these intangible assets because they may not meet some of the requirements that we have looked at the development, the requirements that are supposed to be met in order to capitalize an intangible asset. So how do we measure an asset initially? We are saying measure intangible assets at cost. So they are normally measured at cost, and we are saying costs that are directly attributed or allocated to from the date of meeting the criteria. There should be no retrospective recognition. Subsequent measurement of intangible assets. There are two options for this. Number one, we have the cost model. We are saying it will be calculated as cost less accumulated amortization, less accumulated impairment loss. Then the other method you can use to measure intangible assets subsequently is revaluation method. When we are saying it will be calculated as fair value, less accumulated amortization at the date of revaluation, less subsequent accumulated amortization, less subsequent accumulated impairment loss. So we are saying The useful life of an intangible asset is classified into two. We have what we call the finite. We are saying, you know how many, under this one, you know how many periods you will be able to use the asset, or how many units you will be able to produce with that asset. For example, software or licenses. We are saying, for example, licenses are issued for some period, while softwares need to be updated after some time, or they need to be updated regularly. We are saying, assume the residual value to be equal to 0, unless there is a buyer or an active market. Revise amortization at the end of each financial year. Then we have indefinite useful life, for example, the brands or the trademarks. And we are saying these assets do not have foreseeable limit to the period to which the asset will generate a cash flow. So we are saying this kind of asset should not be amortized. Instead, review useful life at the end of each financial year. How to account for revaluation? We are saying it depends on whether the carrying amount increased or decreased. If it increased, then credit the increase to equity under the title revaluation surplus. Then credit to income if reverses a decrease in profit or loss. If the carrying amount decreases, debit the expenses. Debit to equity if reverses previous increase in the revaluation surplus. So the recognition, that means removal from the accounting system. This is done on two situations. So we are saying, how do we recognize the cost of an intangible asset? We are saying it can be done under two situations. Number one, disposal of an intangible asset, either by sale or by donation. Number two, when no economic benefits are expected from the asset from use or from disposal. So we are saying from the two situations, a gain or a loss may arise, and it is calculated as net disposal proceeds, i.e. consideration received from the sale of an asset less the cost of disposal. So we are saying gain or loss, net disposal proceeds less the carrying amount. Any gain or loss is included in the profit or loss. So that will be the end of the discussion under intangible assets. And thank you very much for being together with us. Thank you for subscribing. Thank you for sharing our videos with your colleagues and your friends. Let's meet in the next video. Thank you very much.